I want to introduce Cannon Camp with JLL to come up on the stage, and I appreciate it.
Thank you, Drew. Again, my name's Cannon Camp with JLL. I work here in Fort Worth, and excited to be giving the office presentation again this year. So we'll kind of go through 2022 forecast and look at my report card, see how I did on my predictions. We'll go through a 2022 stat review, see how the market held up. We'll talk about some notable transactions. Drew's going to make my job really easy because he hit on all the employment stuff, so we can skip through that and maybe make up a little time. We'll talk about some notable office trends. We'll go through each individual submarket and give you an update on those. And then again, the crystal ball of the 2023 forecast. So here was my predictions last year. I said absorption was going to be relatively flat. Generally, that was the case. It was negative 190,000 feet, but that's only about 0.5% in our market. And when I'm talking about our market, it's generally the Tarrant County market. I also predicted corporate America would return to office slowly, and I think that's generally true in Fort Worth. There's a few companies that are not back, but most companies, even corporate America, are back here in some sort of hybrid approach. A couple that aren't. GM Financial is still not back in the office. American Specialty Health up in Alliance is not back. But generally speaking, most companies are back. Small tenants, I said small tenants would make decisions and kind of operate as normal. And I think we saw that. There was a lot of small tenants moving around. A lot of them focused on quality. So they kind of doubled down on flight to quality. So I'd say we're continuing to see that. And then the last one, I predicted that Class B assets would focus on adding amenities. That one really shocked me. We didn't see a lot of that, but I think there were some factors that went through that. I think there were several landlords, Class B landlords in downtown, that just got offers they couldn't pass up on. And they were from multifamily developers, they were from hospitality developers, and the numbers just made sense. It allowed them to take some chips off the table and reduce their risk. And so the other thing we saw was with increased construction cost, some landlords just didn't want to make that investment. So year-end review, this is the total office market in basically Tarrant County. This is Class A and B, and these are office buildings. We track any office building over 20,000 feet that's not owner-occupied, that's not medical, or not government. And so the goal there is really to just drill down on the true multi-tenant market. And so you can see, again, negative absorption of about 192,000, occupancy slightly lower as a result of that. But we did have an increase in rents, which is kind of interesting dynamics in that kind of market. A few completions, and then a few projects under development that we'll talk about. So as far as new deliveries, we had really only a couple. The 701, that was a 70,000 square foot project in the near south side. So that's at the corner of Magnolia and Hemp Hill. They delivered that project in the fourth quarter. That's the new home of VLK Architects. And they've only got about 8,000 square feet left to lease. And activity is really high. They expect to have that leased up early this year. And then two more smaller buildings, one in North Fort Worth, one in Southlake, both delivered middle of this year. Rental rates in the low to mid 20s, triple net. And ironically, both of these are also for sale. So if you're a user looking in that area, those are two opportunities on the ground that you can go buy today. Under construction, we do have a little more product under construction, and these have actually been under construction. The Crescent since before this time last year, and Hillwood Commons was breaking ground this time last year. So Crescent Museum Place, again, best-in-class museum, kind of cultural district project, hotel, office, multifamily. The office building's 168,000 square feet, and it's largely leased. So there's only a few spots left if you wanted to look at that building. Rental rates in the low 40s, triple net, which is new high water mark for Tarrant County, and that should deliver middle of this year, I think first tenants are moving in middle of fall, late fall, something like that. Hillwood Commons 2, this is up in Alliance Town Center. It should deliver in March of this year, and great building, big floor plates, really efficient, and I think it's positioned well as we come out of some of these, as we get some more visibility on the economy. I think you'll see companies start making decisions again, and that one will be on the ground waiting for them. And then Granite Place 2, this is in Southlake Town Square. Granite, this is an expansion of Granite's footprint there. They're building another building next to the one they have, and it should deliver sometime in the second quarter. Again, rental rates for new construction, there, it's gonna be $40 triple net. And then as far as proposed developments, so if you were looking a couple of years out, if you had time to make the decision and you wanted to go into a new project, we've got a lot of really good ones out there, and we can't talk about them all today, but here are a few that have been talked about more recently. I know they've been actively negotiating proposals with tenants that are in the market, and so I wanted to highlight these three because we could hear news about these this year. Clear Fork, they've got one block right in the heart of Clear Fork that hasn't been developed, and so that's 5155 Marathon. It's a 5-story building, 130,000 square feet, have retail on the ground floor. The retail would support the retail that's already there, and be a great new opportunity for someone who wants to be in Clear Fork. The Mullet, this is one of my favorite ones because of the name. So this is on University Drive, and then so it fronts University, and then it backs up to the core of West 7th, and so they've nicknamed it the Mullet because it's business in the front and party in the back. And so I don't know if that nickname's going to stick or not. We'll find out. But 175,000 feet. This is a great project for Fort Worth. It's very dense. So it's only one block in that district, but it's got 175,000 feet of office, a hotel, a multifamily component, and retail. And so and you got to park all that on site too. So a really good project, very dense use. And then down the street on West 7th, another goldenrod project is the Van Zant, and we've been working on that for a little while and refining it and tweaking it, but another really good looking project. So let's talk about some notable lease transactions. The largest transaction last year was a defense contractor in North Fort Worth. I'm sure everybody can figure out who that is. They renewed a 500,000 square foot lease, so that was the largest deal that was signed last year. United Healthcare, a little bit of a different story. And back to the defense contractor, that was the exact footprint they had, so they just renewed the entire lease, even though they're not 100% back in the office. United Healthcare, a little bit different story. This was 2 leases, and they downsized by about 50%, but the renewal still totaled 90,000 feet. Dickies announced plans that they had signed a lease, or announced that they had signed a lease and planned to move downtown. At the very end of last year, they leased 75,000 feet at the tower, and will be moving in this summer. Kiewit Construction, we talked about Kiewit last year. Kiewit leased 50,000 feet at the end of 2021 in Roanoke in the building that Hillwood owns, and then they also expanded by another 50,000 feet over the course of the year. So added another 50,000 feet, so they're about 100,000 feet in that building today. Elevate renewed their lease at Overton Center, long-term tenant at Overton Center, 77,000 square feet. You know, that's another tenant that is not using it at 100% capacity, but they do have people coming in on a hybrid schedule, and so they chose not to really downsize the square footage they were using and just renew their lease, which I think is a good sign. It shows that the companies think employees are coming back probably sooner rather than later. And then H-E-B Centerport, NCR renewed 66,000 square feet. So notable transactions for sales. There's kind of 2 themes that we'll talk about on the sales. This first one really focuses on Class B downtown. We had 3 assets. sell last year. I'm kind of cheating because the Encore building and oil and gas building really sold last week, but I think it tells a really interesting story about downtown. Bob R. Simpson sold to a hotel developer. That was the last XTO asset to sell downtown. And then the other two sold to multifamily developers. And so, these are assets that were older, they had smaller footprints, they needed a lot of CapEx put into them. And so I think these developers saw opportunities. And so I've been really impressed with developers looking at opportunities downtown and understanding that this may not be exactly the product that corporate America wants, and they may have some challenges releasing it. So all of those never really negatively impacted the Class B office market. They'll just be taken right out of the inventory. So all great news for the CBD market and future of downtown. So totally different story here. All three of these assets are located west of downtown in Fort Worth, and all of these sold to either local office investors or to partial user investors. So University Center, it's 100,000 square feet, great location at University and I-30. And that's kind of the common theme here too, is that all these assets have great locations. And so University and I-30, this building needs some TLC, and the new owners are gonna spend quite a bit of money renovating it. 111 Bolin, also a local office investor. That building was previously occupied by Lone Star Resources, and so these guys bought it 100% vacant. And by the time they closed on it, they had already leased the third floor and all the vacancy on the second floor too. So great story there. They've got one space on the first floor if there's any tenants looking for ground floor space, title companies, banks, stuff like that. It's a great space. And then Museum Place, the Flatiron, that sold to Vantage Bank. They're gonna take the top floor, and then they could expand into the rest of the building as leases, or parts of the building as leases roll, but they're TBD on that. But the important note here, all three of these assets located in the tightest Class A submarket in Tarrant County. They're all extremely well located, and investors and users saw those opportunities and capitalized on them. So Drew talked about this employment. There's one particular part of employment that I want to talk about, and it relates really more to office using jobs. And so traditionally we see employment peak in November, and I think because of seasonal hiring and stuff like that. But here, for office using jobs, we really saw that peak last June. And I think that's something we want to continue to watch very closely as the economy changes, and see how that grows and how that recovers. And then the last part of it, this is again, office using jobs as a portion of your total job market. And Tarrant County, or Fort Worth, which includes Tarrant County, all of Tarrant County, is really lagging behind the major metros in Texas. So, just slightly behind San Antonio, Houston, but significantly behind Dallas and Austin. Ours office using jobs make up about 18.5%, and both Austin and Dallas are over 30%. So we need to keep focusing on adding office using jobs as well. Trends. So we talked a lot about the same things last year. So we'll go through activity, return to office, hybrid, flight to quality. Those are all things that people are still talking about and companies are still talking about as they're making real estate decisions. And so activity first, I'd like to just play this clip from Old School because I think it kind of sums up general market sentiment.
Great effort so far. Let's just keep it up.
That's right! We can't have anyone freak out there, okay? We've got to keep our composure. We've come too far. There's too much to lose. We've got to just keep our composure.
So I think he said it best. I think we just got to kind of keep our composure. Let's continue to be nimble. Let's continue to be creative. We're all going to have to be creative. We're all going to have to chase deals. And so, But leasing activity, it really depends on the product type and the location. So well-located projects with Class A amenities, still seeing good activity. Demand for new product is still high. Most of the deals in the market are smaller, but there are 3 to 4 deals in the market today that are over 40,000 square feet, which is a good number for the Fort Worth market. And then if tenants can wait, I mentioned this earlier, if tenants can plan ahead and they can wait and they have visibility into the future, we do have some really great new development opportunities. Parking garage utilization is up year over year. We see it, downtown's really where we can judge it, and we see it anywhere between 65 and 75% during the middle of the week. And then on Fridays, that number probably falls off to 40 or 45%. And then the key card data, Texas is still leading the charge, and it's up year over year. So this data is, again, from Castle Systems, which is a security and access control company. You can clearly see that Texas is leading the charge. You've got Austin, Houston, Dallas, all at the top. Austin's extremely surprising this year. They were up 20% year over year. Houston, almost the same. And then, DFW, we're right at around 53%. You still got, we saw dramatic increases in New York, and then also Chicago. The Chicago part is really largely in the middle of the week. The Monday, Friday numbers are pretty low, but the middle of the week, we do see people coming in. And then just like a lot of the other guys have set up here, San Francisco, San Jose, still struggling. So this chart really shows kind of what companies are thinking today. And it's funny to watch this over the past year. It could change daily. And you'd hear an announcement that somebody was coming back to the office, and then nobody would come back to the office. So this data is kind of hard to get. If companies want their employees to come back and they're not having a lot of success with that, you're not going to hear about it probably. And so, but generally the themes here are that you still got a lot of tech companies that are focused more on remote work, and you've got a lot of business and professional services firms that are focused on office first kind of hybrid approaches. We have seen a few tech companies come out and say they need people back. Tesla, Elon Musk has been very vocal about wanting employees to come back to the office. We also had Disney announced last week that they want everybody back, and so did Vanguard. So I think we will see more announcements like that, especially if kind of economic headwinds continue. Flight to quality, this is still something that we talk about daily. The main reasons, and we saw it before COVID because of the employee market and companies wanting to attract and retain the best talent. Now we're seeing it for some different reasons. Return to office is a big one. How do I get my employees to come back? And one way you can do that is to have nicer space and elevate the office experience for those employees. It's still heavily focused on amenities. It's conference facilities, collaboration areas, lounges, cafes. Fitness and wellness is a huge part of it. Outdoor space, walkability, experience management, all those things. Experience management is pretty interesting. It's when you park in the garage, you come in and your coffee's ready. It knows you want a coffee every day, and so when your toll tag is done, it already has your coffee. It sends it to the Starbucks, and the Starbucks has your coffee ready, kind of stuff. So we're seeing more. Landlords look at more of that, and the reason they're doing all this is because payroll is really the number one cost still for typical companies. So occupancy cost generally is about 1/10 of payroll cost. So it's worth investing in. And then kind of what does the new office look like? This is probably more true on a national scale. I think in Fort Worth we tend to be a little bit more old school, where we do see more private offices inside spaces. But generally speaking, the individual space and the support space versus the collaboration space is kind of flipped. And companies are designing their space to where there's more opportunity to collaborate, there's more lounge space, it's more open. And then everybody's got a smaller area where they can go do kind of head down work. So let's get into the submarkets real quick. We'll just kind of hit the highlights. The stats can be a little bit monotonous, but we'll go South Fort Worth, North Fort Worth, then Westlake, Southlake, and make a loop kind of coming back into downtown. South Fort Worth, again, this is the tightest Class A submarket that we'll go look at, but these numbers include A and B, and again, it's the 20,000 feet, not owner-occupied, no government, no medical. Highlights here, I guess low light really. Negative net absorption of 68,000 feet, all of which was in the Class B market. You did have TCU move into about 50,000 feet at International Plaza, and you had United Way lease about 18,000 feet at Rupert Street. We did see some large move-outs. Apex Capital vacated 70,000 feet at Western Place, and then a defense contractor vacated about 40,000 feet, and then they also vacated another 70,000 feet at Wilcox Plaza. So if you go out west on I-30 at Western Place, Ridgemar, and Wilcox Plaza, you now have 12 full floor opportunities if you need space. North Fort Worth, the main point here that I kind of wanted to highlight or talk about is, even though this is 86% leased, you've got some major sublease opportunities in this market. So Galderma has 200,000 square feet. American Specialty Health, which I mentioned earlier, has 165,000 square feet, and DynCorp has 120,000 feet. So you've got some big sublease opportunities in that market. Westlake, Southlake, 32,000 square feet of positive net absorptions, relatively flat. Tenants shuffling around, some expanding, some downsizing. Notable move-ins, Kiewit, we talked about, expanded by 50,000 feet. We had multiple tenants at District 114, lease space totaling 45,000 square feet. And Goosehead Insurance continues to expand their footprint in Solana and added another 26,000 square feet. A couple of move-outs, Robinhood, who leased space in Solana during the pandemic, put that space on the sublease market and moved out. That's 50. And then Veraspace lost 40,000 feet. And Veraspace is going to flex in and out. They're really set up for shorter term deals. Not that they may not do a long-term deal every now and then, but they're set up to accommodate short-term kind of immediate needs. And then again, only one asset under development here, and that was Granite Place. Also to note, this submarket has the highest average Class A rents. And that's an average of the entire market, so it's not necessarily the most expensive building in town, but on average, that's the highest rents. Arlington, Mansfield, this is, the one thing that jumped out here to me is that you've had negative absorption 3 years in a row there. The largest move out was Triumph Group, which was about 100,000 feet, so 110,000 square feet. So, there's only one new project under development here. It's 2170 East Lamar. That should come online late this year, and it'll just be interesting to see how the market absorbs that new construction. Traditionally, across the market, we've seen new construction lease well, and so we're hopeful that continues here. East Fort Worth, HEB, absorption slightly negative, no new deliveries here, rates relatively flat, not much changed, only 63% occupancy, but again, this was the same story last year. This has the largest block of available space in Tarrant County, and it's the former American Airlines headquarters that Capital Commercial bought. I think with some announcements for defense contractors, they could see some leasing this year. So we'll continue to monitor that. And then the last submarket, downtown Fort Worth, positive net absorption of 47,000 feet. We talked about Apex moving out of the west side. They moved into downtown. Dickies, we talked about Dickies. That was really good news for downtown. But we did see some tenants downsize or vacate. Basic Energy moved out of 2 floors at Burnett Plaza. United Health, that was part of their downsize at 300 Burnett. The Star Telegram building, Star Telegram itself downsized by another 17,000 feet. So I think with downtown, when you're thinking about it, the Class B market continues to evolve and shrink and adapt, and those are great opportunities. But you also need to think about the Class A market, and we do have several full floors available in downtown. We've actually got, across the big buildings in downtown, we've got 20 full floor opportunities. So why I'm long office, just quick. I mean, I think it's still the same story. I think many companies still think it's a need and a place where people come together for creativity and growth and talent development and mentorship and training the next leaders of your company. What I added to this list was that it's got to be well located for employees to want to come back and use it, and you got to pay heavy attention to amenities. So areas of concern, high interest rates limiting new development. You know, new projects are already hard to kick off. Construction costs make it difficult, and that rental rate gap that Ben was talking about earlier has made it difficult. But today, with higher interest rates, you're just going to need more pre-leasing, and banks are going to offer less leverage. Hopefully we'll see that change towards the end of the year and maybe level out. Corporate relocations, you know, I think with the looming economic uncertainty, I think we'll see those slow down quite a bit. We've always had to work hard for corporate relocations on this side of the Metroplex, whereas North Dallas has really done well. But I think we'll see that slow down. And then back to the 20 full floor opportunities in downtown. Yeah, I think we need to focus on targeting some smaller companies, and we don't need to land the HQ, you know, 500,000 square foot deals. We've got 20 full floors downtown. Let's focus on some 20 and 40,000 footers. Get them to lease those spaces, give them the tools to grow, let them fall in love with Fort Worth, and then backfill the space. And then last thing is, you know, we're hearing more and more about shadow space in downtown. And so that's something we want to keep our eyes on very closely, especially in some of the lower rise buildings where we don't have as much access, and we just want to make sure we're understanding what's going on. Transaction to watch, you know, A&M announced their plans for their downtown campus. I think they'll pick a development partner and potentially even start on construction this year. So that's something to watch. The Star Telegram building's under contract to the same developer that bought the oil and gas building, and they're supposed to close in May of this, or in a few months, and add more multifamily units, take more space out of the market. Central Library is under contract to Dart Interest. That's supposed to close in May. The Omni has the TCC site under contract again and have a hotel expansion plan, and that's supposed to close any day now. The city has engaged HR&A advisors to take a fresh look at Panther Island, so it'll be really interesting to see the results of that survey and those plans. And then lastly, I predict that we'll hear of one major anchor tenant, at least one major anchor tenant, announce a move from downtown. They probably won't move this year, but I think they'll make an announcement. So my forecast, again, I think absorption is going to be relatively flat this year. I think corporate America is going to be a little more aggressive returning to office, especially if the economy worsens. I think it'll be limited impact on smaller tenants. I think they'll still be nimble and making moves. And I think most of those smaller tenants will choose to go into nicer buildings. I think we'll see increased vacancy in Class B and C assets as leases roll, especially in areas where there's not a lot of amenities or it's not very walkable. And then lastly, I think new construction or new AA office rents are going to be over $60 a foot all in. So that's a combination of increased construction costs, higher interest rates, but I think we'll see it over $60 a foot. And last thing, you know, I talked to a lot of people when we're putting this together, and so thanks to all the guys that help us do it. It's really a collaborative approach, and so we appreciate everybody's input,